Hi there, important question. What must happen for the stock price of PayPal to double? I mean to have an increase over 100%. What has to happen? Well, the stock price goes up if their revenue goes up. And as you can see in the last quarter, or for the full year 2023, the revenue has increased by 8%. So this is good. But the stock price year to date is still down almost 4%. So what's going on? When it will go back to $300 or even more? When will that happen? Well, besides the revenue growth, you also have to look at the other fundamentals, such as earnings and free cash flow. If they grow more in the future, then the stock price may double. But if they don't, the stock price may stay low for a longer period or go down even more. So in this video, we'll find out what's going on with PayPal. Why the stock price doesn't rebound when the revenue went up 8% for the full year 2023. So when you look at PayPal, you have to look at some indicators, some important indicators. The first one is total payment volume. If this volume goes up, and as you can see, it went up 14% year over year, so this is a good sign. This is the first important indicator, the total payment volume. If this volume goes up, the stock price will follow. It will go up. So for the moment, as you can see, the latest results, their volume went up 14%. Then the next important indicator is the revenue. If it goes up, then the stock price will go up. So revenue was up 8% year over year. But why the stock price doesn't go up? It was up to $65, but now down to $60. So there are more important indicators you have to track. And the next important indicator is active accounts. Because as you probably know, PayPal makes money based on the number of accounts. And of course, the volume. But when their active accounts don't grow, then this signals a problem that PayPal is losing more market share. And as you can see, year over year, their active accounts has declined by 2% to about 426 million. So that's why the stock price haven't reacted that much year to date. Because the market doesn't like this decline in their active accounts, even though the revenue and the total payment volume went up 14% and 8%. But as I said, you have to track all the important indicators. So this is another important indicator, active accounts. By the way, a better indicator than active accounts is their monthly active accounts. Because I also have a PayPal account, but I don't use it quite at all. So they report 426 million accounts, but as you can see, a better indicator is the monthly active accounts, which are around 218 million. If those two indicators go up, then the stock price will rebound, because you have growth in the total payment volume, as you saw here, and growth in the revenue. And on top of that, you also have to see growth in their active accounts, plus monthly active accounts. So as you can see, their monthly active accounts haven't declined. They reported an increase of 1%. That's good. Now, besides this, there is another important indicator, which is their total take rate. And as you can see, the total take rate was 2.03% in Q3 2022, but now that take rate has declined to 1.96%. So, if their take rate declines even more in the future, that will be a problem, because the revenue might be lower. However, as I said, there is not only one important indicator, there are more. If the total payment volume grows more than the decline in the total take rate, then that will be a plus for PayPal. The revenue will increase quite a lot. And of course, if they attract more users to their platform. So as you can see, their total payment volume went up 15%. It has increased by 15% in Q4 2023. And their total take rate has declined by over around 5% year over year from Q4 2022 to Q4 2023. So from 2% to 1.96%, a decline of 5% if you do the math. So overall, they had a plus 9% increase in their revenue and 5% decline in their take rates. So the real growth rate was about 4% year over year. And that's good. But as you probably know, PayPal was expected to be a growth stock that grows its revenue and earnings more in the future by more than 10%. But that hasn't happened yet, maybe in the future. And that's why you see this decline in the stock price. Over 70%. And the PE ratio, or you can use price to free cash flow, is lower, about 15%. So the real growth was about 5%, and that's why the PE ratio is so low, about 15%. But if the growth rate improves, I mean, for the take rate and total payment volume and revenue, and also their active accounts, then this multiple gets higher, and also the stock price can double from the current level if PayPal reports higher growth rate in the future. Now, besides this decline in their take rates plus active accounts, it's not that a huge decline, a small decline, but you have to be aware of their business model. Because if they don't grow more in the future in the next 5 to 10 years, then the stock price won't do great. And that double may not happen. So you have to be very careful of the risk. And then you can focus on the reward, their opportunities, because PayPal really has great opportunities ahead if they can compete efficiently. Now, if you look at their free cash flow, you can see that it has declined by 17% year over year in 2023. So this is another downside for PayPal. That's why the stock price hasn't rebounded this year. It's still down 4%. So the market is uncertain. It doesn't know whether PayPal can grow more in the future or less. The market doesn't know this answer, and that's why the stock price is so down, so cheap. So their free cash flow for 2023 was about 4.2 billion. However, if you read more about the numbers, you can see that they also have 17 billion in cash, and that's great, plus debt of about 11 billion. So their net cash position is about 6 billion. That's good because they can fund other opportunities with this money. Now, if you look at their guidance for 2024, they expect some growth in revenue of about 6%, their free cash flow to be about 5 billion, and do some buybacks, at least 5 billion. So, at the current market cap of 63 billion, if they do 5 billion in buybacks, then your return may be around 8 to 9% only from buybacks. Plus, if they succeed to increase their growth rate in the next 5 years, then you can also have a double in the stock price. But only if the active accounts go up, the take rates and the total payment volume goes up. If that happens, then the stock price can double easily. Now, as I said, the most important indicators are active accounts. If they go up, that will be great. But as you can see in the last quarters, they went down, a decline of 2% and 1%. Then the next indicator is total payment volume, which keeps going up, and this is a good sign. And of course, if this goes up, also the revenue goes up, only if their take rate stays stable, of about 2%. But if it declines even more than 1.9%, then that will be a problem. The revenue will go down, the growth rate will go down, and their free cash flow will decline. So in the next 5 to 10 years, maybe PayPal won't be such a great investment if their revenue goes down. So I hope you understand the risk. Now, let's focus on the reward. Their opportunities. As you can see, for the full year 2023, their total payment volume was about 1.5 trillion. So if they can increase this volume, then PayPal will do great in the future, even though their take rates may decline a little. And of course, if they can also increase their active accounts to grow more than 400 million, to gain more market share. But as I said, the most important is the total payment volume. If it goes up, then PayPal will be able to increase the revenue if the take rates stay stable. Now, what is the opportunity for PayPal with the current total payment volume of 1.5 trillion? So you have to ask the question, what is the size? How much can PayPal grow in their volume? So you have here 1.5 trillion. Keep in mind this number. And if you research more about their market share, you can see that the total non-cash payment, the digital payment, the volume was about 128 trillion in 2021. And now it's even more. But you can see the difference. PayPal has 1.5 trillion in total payment volume, and the total addressable market is about 128 trillion. So you can see the difference. PayPal can grow more than 5x from the current level. But of course, this can only happen if they attract more accounts, active accounts, to their platform. If they report a higher growth rate in their active accounts, then PayPal will do quite well in the future. Even though their take rate may decline from the current level. It might go down to 1%. But as I said, if they attract more users, more active accounts, the total payment volume will go up. And the revenue will also follow. And when the revenue grows, they report a higher growth rate in the future. Their free cash flow and earnings will increase. Thus, the stock price will double. Quite even more. It might go up 3x or even more. But the next question is, if PayPal can attract more active accounts. If they can do that, then the stock price will do quite well in the future. So, if you believe in the future of PayPal, that they can attract more users to their platform, then you can take advantage at the current level. And you might double your money in the next 5 years. As they are doing 5 billion in buybacks, the stock price can rebound from the current level. But as I said, everything depends on their future growth rate. Now, if you want to find out better opportunities than PayPal, then you can join my research platform, where I analyze better companies that have a moat, a margin of safety, and can more than double your money. So if you are serious about investing, you can send me an email or see the video description. So that's it for this video, and if you have other questions, please let me know in the comments.